Much has been said about these historic low mortgage interest rates, but also that rents are going up. Well, I wanted to take an example of a real life condominium, a 1 bedroom and 1 bath being sold in the city of Glendale, and wanted to compare it to a 1 bedroom, 1 bath apartment. Hi, this is Israel, your Southern California loan officer, and in this video, that's exactly what we're going to be talking about today, as well as financial tips, market news, and the most important thing, how are those mortgage interest rates holding up as of today? So with that, let's go ahead and get started. How's it going, guys? Today is December 8th, 2020. And as you can see, there's a little footage of the beautiful city of Glendale. Really nice, clean, really organized. And as you can see, very nice looking city down here in Southern California. But with that comes really expensive rentals. And that's exactly what we're going to be covering today. So let's go ahead and get started with today's news. All right, what do we have? Lots of similarity between some surprising differences between rents and home prices. I'm going to scroll down here below. And what do we have? Basically, what you have here, these are the single family rents, the cost of them right up here versus what it would cost a mortgage, an average mortgage payment. As you can see, a little bit higher than that. They seem to be trending right about the same. Little dips here, little dips there. But for the most part, rents have been and continue to go up. I wanted to show you this additional slide here. And what do we have? Glendale apartments rent ranges. This here shows 1 bedroom apartments, which are closer to the average that they were able to pull. And check this out, 76% of the properties in that city are over $2,000. 17% range from $1,500 upwards to $2,000, and the low 7% properties that rent for $1,000 to $1,500. Now, I told you guys I'm a numbers guy. I love numbers. I like to compare apples to apples. And so here is this graphic that I put together. First of all, the properties. What we have here are two different properties. One of them is a condominium and the other one is a townhome that's for sale. If you were to see them at the first glance, I don't know, put it down in the comments. Which one do you think is the one for sale and the other one, and which one is the one being currently rented? Well, let's go take a look. Exactly. The condominium right over here, it's a condo selling for $365,000 with an 18% down payment. Now, what's the 18% down payment coming? Let me back up a little bit. This would actually be for a conventional loan, okay, requiring at least 5% down payment, which is your $18,000, with an APR of 2.75 and with an interest rate of 2.75 and an APR of 3.15. This being a 30-year fixed loan, giving us a full total mortgage payment of $2,181. Take in mind that anytime we're talking about condominiums or townhomes, there's always an HOA. The HOA on this particular property was $261, I believe. That's already included on along with this payment of $2,181. Now let's take a look at a condominium or an apartment. Went over to apartments.com. There it is, the 1 bedroom, $2,400 in the city of Glendale. What else? Deposit, $1,000 deposit. So let's go back to our previous graphic. And again, $2,400 with a deposit of $1,000. Now, I know a lot of you guys are going to say, well, yeah, there's a huge difference, $18,000 versus $1,000. Well, yes, but take a look at the monthly rent, $2,400. When here you're only paying $2,181. It's about $200 difference, give or take. But now, what are the main differences? Well, the main differences is that I remember a while back with I used to live with my wife, and I used to rent an apartment, and it was every single year, I kid you not, it was an increase of $100. Every single year, it was like $100, $100, $100. Why? Because that apartment complex didn't have rent control. And a lot of the properties down here in Southern California fall under that. At any given point, the landlord can increase that payment on you. Number two, what I would consider a con, which be no equity buildup. You're not building that equity that you would otherwise be building up if you were to be owning a property. The third one ties in with the second one, no ownership. Really, when you think about it, you're not the owner. In fact, you're actually helping the owner pay for his loan, because there's going to be hardly any large investors, or unless there are these mega companies. But for the most part, there's a lot of landlords that actually obtain a loan to get that building. And so even if it's a landlord or even if it's a mega company, you're actually paying, you're contributing to paying their loan, versus you taking that opportunity of getting yourself your own property and paying your own loan, your own mortgage. Okay, with that, what else do I have? I have the, let's go take a look at the candles. What do we have here? MBPs, mortgage-backed securities. They closed today at a 0, which is good. We didn't get those those long blue candles. Neither did we get the white candles. For all the newbies out there, we don't want to see blue. Every time we see blue, those rates go up. Whenever we see those white candles, rates stay stable or they go down. Basically, it's the selling and buying of bonds. The more sell of that particular bond, well, that's when the interest rates get impacted and they hit us hard. All right, that's it. Let's go take a look at how the interest rates are for today on a conventional loan with a 20% down payment. If you notice on the slide prior to we were talking about earlier, the interest rate was a little bit higher. That's because they were coming in with a 5%. If you were to come in with a 20%, these are the interest rates that we would be offering you as of today. Do we see any difference between yesterday and today? No, not really. What about the competition? Always, Wells Fargo, Bank of America are going to be at par with us, with the exception of the APR. We always beat them at the APR, which is the entire cost of a loan. Chase, 2.75, much higher than we are offering. Now let's jump on to FHA loans with a 3.5 down payment. Any changes? None whatsoever. For all the newbies out there, just depending on what your FICO score is, these are the interest rates that we would be offering you as of today. Competition wise, beat them yet again. 2.375, 2.75 US Bank, and Citibank 2.625. We down, with us 2.25. And not only that, if you were to walk into one of these banks and say, I'd like to see, about getting one of these rates that you guys are offering, they're going to say, great, let's go take a look at your credit. If you're 740 and above, of course, we can go ahead and offer you that rate. But take a look at this. With us, if you're in the range of 700s, starting at 700s, you're also qualifying for that rate. Versus these large banks, they're just going to say, no, for us to be able to, offer you this rate, you're going to need at least a 740 FICO score. All right, that's it with the rates. We don't have any other properties because of the example we have as of today. Like to thank you guys. If you're thinking about refinancing, purchasing, or just want to know what the value of your property is, definitely give me a call at 661-388-7667. God bless, and I'll see you guys on the next video. Bye-bye.